Here we go.
Yeah.
Oh, okay, good.
Hey everybody, welcome back to She's Got the Keys. Today we have a very special guest with us. It's episode 7 and we're bringing in Leah Zamir.
Hello.
Welcome to the
Hello,
show.
hello. Thank you.
So excited to have you here.
Me too.
Leah and I go way back.
We do. About a year. No, 2 years.
Several years.
3 years.
I remember.
I just had a baby, so I have no idea what time it is.
Time's
what day it is, what time it
It's
is.
been 2 years, and I
There you
remember like when I first met Leah, I brought her over I met her at an investor class because I was learning how to invest better, and I really just wanted to find other women who were investing, which Leah was, and so
We're a rare breed.
I was like, hey, will you come and check out my Airbnb and maybe we can film something on the camera?
Oh, yeah,
and
it was cute.
Yeah, it was not as nice as this, but
No, we've upgraded.
we've learned, we've grown so much.
We learned how to edit background noise.
Yeah, look at us now. Look at us now.
We got tricks up our sleeves. Thank you so much for being here.
Of course.
It's lovely to meet you in person.
I know.
Really
I followed
excited.
this lady for like, I don't know, a year, maybe 2 years, because I feel like
probably
as long as you guys know each other, she's
year and
like,
a half.
you gotta meet this girl. She's
Year and a
so
half.
cool.
Also, I think it's episode 6, isn't it?
Is it 6? Sorry, guys.
That's okay. 6, 7. I don't.
Yeah.
Last week I thought it was like 4. So
Just put me at
welcome
7. Film
to
someone in
episode
between.
100.
So, should we go back and talk a little bit about who you are? That's an overreaching question.
I know. I'm a Gemini.
Good. No, it's good to start with
I'm a
that,
Virgo.
right? We talk about
I just
this
had a
lot.
Virgo.
Oh yeah, that's right.
Yeah.
I'm a Virgo moon. That's why Sarah and I get along so
I'm
well.
Libra rising. I don't know what that means, but someone told me that once.
You're
Nice.
what rising?
A Libra rising.
Ooh, okay. You lead with your heart.
Oh,
Oh,
that might make sense.
I believe
Yeah.
that from what I know of you.
Yeah.
I am Leah Zamir. I've been a mortgage lender for, I think, going on 10 years now.
So you must be like 40. Is that right?
Yeah, roughly. I like to tell people I'm 10 years older than I am because then I look really impressive. Like,
That's right.
oh my God, you look so good for 46.
Yeah. Leah thought
36.
that I was way older than her when we first met. She kept like mentioning how old I was. And I was like, wait a second. How old are you? She was
It's actually called a neg. Look, she can't get off my jock now. She loves me. I've got her forever.
yeah. No, but she thought I was 40 because I had kids, and it turns out that we were the same age. So she decided that we could be friends. I remember there was like this one meeting that we were hanging out, and she's like, "So we're like friends now."
No, I think I said,
right?
are you
we-
trying to be my friend? And then
Not dissimilar to how we met. Emily literally said, "Can we be friends?" And I was like,
right, she doesn't give off 100% friend vibe right up front. It's like almost like she's
Oh, no.
using the professionality and then sideswiping you the friendship.
instantly she was like, let's be friends
I
today.
asked Sarah. I told
Oh.
Sarah I'm in the market
Well,
for friendship.
she probably learned.
Yeah, I think I
maybe
learned it from Leah.
Okay.
Being so obtuse about it because she was like, "Are
Oh,
we?
Thanks.
Is this
What happened?
Is this becoming friendship?"
I know. I was confused. Not everyone wants to be my friend. They just want to use me for my knowledge.
Yeah, no, not that. But
So
we are
that's my
using you
credibility.
today.
Today we are going to use you for your knowledge,
Use it.
but in the best way possible.
This is my coming back story because I've been on maternity leave for 3 months. This is my second day at work. So if I fumble through some words, it's not
Amazing.
because I don't know.
What a great second day back at work.
It is.
And
It's
she
fun.
decided to spend it with us,
I know.
right?
Thank
She
you.
left
I
her
did.
babe to be here and
Yes.
tell us about Guild.
So, I mean, it's a great mortgage company. They let me do things kind of entrepreneurial. And ever since I bought my first home, I started getting the investment bug. So
Okay, hold on. How old were you when you bought your first home?
I was 23 or 24. And then I bought my second home when I was 26 because then I just started to kind of real estate hack. We would buy like a little bit bigger of a space every time and just put the minimum down. And then my goal was to get to 7 residential properties because I've done some commercial stuff too, investing wise. Once I started to get the itch, it doesn't ever really go away. So
Yeah.
I've done short-term rental, long-term rentals. Obviously I do loans, so I help people with this stuff, but then I also just myself have tried and tribute, is that a word? From everything
It'll
I've
be a
done.
word today.
Yes.
Yeah.
You got it. You
buy it.
knew what it meant.
Yeah. Amazing.
Excellent. So, when you were purchasing homes, did you find that it was really easy because you know different loan products and you were able to analyze the numbers a little bit better?
Yeah, like I feel like I was able to leverage them from understanding like how to leverage mortgages in general, and then as new products and situations came about, I kind of like, the more, I mean, anything, right? The more you know, the better you can be at something. So I think educating yourself opens a lot of doors.
Okay, but do you think it's easy to purchase where we live here?
It can be. Like,
Okay.
it can be. Like, if it's your first home and there's a way. There's always a way to make something happen. If you're looking to buy, like, strictly investment properties, like cash flow and things like that, we live in a harder market for that. But buying your first home, your primary residence, yes, that is easy here.
Because I think that's something that Sarah and I deal with a lot of the time is folks are always telling us we're waiting for mortgage rates to come down or we're waiting for the housing bubble to burst. They're always waiting for it to become less expensive. And the problem with that is that so is everybody else, right? Everybody wants a deal. But what I tell my clients is it's always best to have bought 20 years ago.
Yeah, I wish I bought my first house when I was in high school, but those days are past. The best day to buy the house, if you couldn't buy it today, buy it tomorrow.
Yeah, they say the best time to buy is yesterday.
Yeah.
That's the slogan, yeah.
Yep.
I agree with that. I mean, I think, at any point in time that you find yourself with, even so when you do go into investing even here, right? Like the more money you have, it's always what's suiting you better with your money. So like, does this investment work better or does this investment work better? Like once you have the capital, maybe from buying your first prime residence, then the conversation just is really exciting because it becomes, where does my money best suit me? And like, what's my next step? But the first step is buying a home, always. I mean, sorry to cut you off, but it's exciting because it's the only real thing that turns you from, statistically speaking, from lower to middle class. Like you have a set payment, no matter if it was a high interest rate or not, you have a set payment. Your income should continue to increase with inflation. And your payment for your mortgage, which is one of the biggest things you're always going to pay for where you live, is not going to change. So.
And I think one of the economists that we went to go see live a couple weeks ago was talking about the discrepancy between people who have property and those who don't.
Yeah.
The wealth gap is like 60%, right?
Yeah. It's probably there. I think in some nationalities too, like because they do all the statistics across the board. I think like Hispanic culture, they were doing some statistics where it's even a larger gap because they have a lot of money saved. Like there's a lot of, this is hard to talk about like live because people are, are you like stereotyping? But in finance, we do look at a lot of, and we'll talk about it later when we talk about down payment assistance, but there's a lot of statistics out there and a lot of different cultures look at money differently. And it's kind of, that's what with this new programs that have been coming out in Washington, it's kind of fun to look at and think about and design conversations around.
Yeah.
Yeah.
Yeah, housing's always going to be the biggest expense in your life. Purchasing a house is the best way to solidify what you're paying on your housing every single month for the foreseeable future, as opposed to your rents, which are going to change. And even though your income's going up, your rent's probably going to go up too, and you're not investing in anything that you're going to get back in the future.
Exactly. You said that better than I. Thank you.
You just had a baby, you made a human, and you're also here on day 2, and you still know way more about this than I do, so like kudos to you.
Oh man, but you just like solidified that. It was a perfect explanation. Thank you.
So over this past year, though, affordability has become much more expensive. One of the primary drivers of that has been mortgage rates. What the heck happened, right? Like what happened to our system? Why are mortgage rates so high? And why is it that when we do see that the feds are going to go cut rates, that it isn't directly correlated to what we're seeing in mortgage rates?
Yeah, that's actually like the most common misconception that I hear, even like no matter how long I've been in the industry, every time the Fed comes out with an announcement of reducing rates, I always get like 1,000 emails and I have to copy paste my response because the Fed rate has nothing to do with the mortgage bond. If you look back like 10 years, you'd see that like 50% of the time whatever the Fed decides, the mortgage rate responds exactly, and 50% of the time it does the opposite. So it is no gauge. But why interest rates change when they have those announcements are because of whatever they're talking about. So like if they have economic news that's looking positive, then you might see interest rates come down. If the outlook from Jerome Powell is kind of negative, then you might see rates lift. Even if, we were predicting, so the reason it didn't happen in September when I think they had that 0.5% drop, or maybe they had already priced that in, because like the market already suspects what's going to happen.
What do you mean priced that in? Can you
Oh,
explain
good
that
question.
for me?
Yeah, so like in a regular mortgage world, when we're looking at rates, it's not like our banks just are erroneously picking out fees, right? Like we're pricing things off of the 30-year mortgage bond. Now, if you go to Wall Street and you talk to big investors, you're looking at, they're either putting money in stocks, or they're putting in bonds, or maybe they're holding cash, or they're buying things like gold, silver, Bitcoin, right? There's like really only big pockets where you can keep funds. And so usually in a regular market, when stocks are doing really well, you'll see interest rates worsen because money is leaving the bond market through it. Because in September we had the best rates we'd had in like, I don't know, a year and a half. Right before.
And then once everybody got the news, we saw this shift and rates went back up.
Yeah, because they were like, there's all this hype that this might happen. Oh, it happened as we thought. It's less cool now. We don't need to keep our money in here. We'll pull it out because it's a big movement, right? And then there was all this election stuff happening. And I predicted this a lot, and some people didn't like my email, but we saw it happen 4 years ago. But like if Trump, and no matter who you voted for, it doesn't matter, because like the facts and the way the money moves is the way the money moves. Like you can argue that someone wanted to get into a big debate about it with me, and I'm like, dude, it doesn't matter, just watch. If Trump gets elected, we won't see rates fall as much because Trump is pro-economy according to like the money numbers, right? And so what happens then is a lot of money goes into the stock market, and you'll see like a huge lift. A great other thing is like, another example of this is I had money in the stocks and a lot of medical supply stuff, and when RFK was announced as the health advisor, he's not really pro-medicine, so all my stocks took a dump because it's just all predictive and analysis, and it's how that money flows that moves the market.
What you're telling us is that the mortgage industry is emotional. And if we get a lot of good news, then the mortgage industry is going to represent a higher interest rate. And if we get a lot of bad news, we're going to see a lower interest rate.
Yeah, so usually well, I mean, it's so hard to relate something as good or bad, because I know you're trying to simplify it and I'm trying to complicate it, but it's like, if anything that is good with inflation, if inflation comes down, this is what everyone's looking at right now. If inflation comes down, then you will see interest rates come down. So one like little trigger point is like, check your gas. If the gas you bought this week versus last week is lower, then you're probably going to get a better lower mortgage rate. And that's actually been the same since.
That's a nice, easy tip and trick.
Go to Costco, fill up your gas tank, and let
Every
me know
month.
what's your mortgage rate's going to be that week.
Send us a pic of your gas rates each week so that we can post it.
Yeah, I mean, I get nervous. I'm like, whoa, we're $3.89.
You got $3.89?
I was in Oregon.
Okay.
My bad.
Costco in Covington has pretty cheap gas. That's the cheapest I've found.
What was it?
Side note, I don't know what it was the other day, but usually if I'm getting gas that week, that is the cheapest place I can find.
It is like
In my bubble.
Our podcast got to like the pinnacle of excitement with us talking about gas prices, for sure.
Yeah.
I know.
It is exciting.
Yeah,
I mean, it really is something that
I brought it
people-
up, but I'm just saying.
it really is something that people follow.
They should, and then they should know that maybe call your real estate agent the week
I
up.
like that correlation.
Yeah,
Yeah,
It keeps
definitely.
keeps you up top of mind too,
Yeah. Think of me at the gas pump next time.
and maybe me just a little bit.
Yeah.
That's amazing.
Okay, so we've kind of covered the fact that housing prices are up, interest rates are up. So what are the ways that you are trying to get first-time home buyers into those homes with a mortgage that makes sense to them?
Yeah, I mean, I do work with a lot of clients, and I hear from the like other lenders, they talk about like, well, plan to refinance. And so I think that the refinance gets talked about too much right now. And of course, that's like the end goal. Like you can refinance your mortgage to also lower. So like your payment is fixed, like we talked about earlier, for when you get into it. It's never going to change. It could change, and most likely it'll come down with time because you can refinance that mortgage into another one. So I think it's important to know that that exists they act like, these new loan officers act like that's like new news. That's been the case forever. I mean, I've refinanced almost every mortgage I've ever had.
And that's outside of like the buy downs, right? Or
Yeah.
are you talking about both of those?
Well, I'm more talking about like because when it ties into how we pre-approve people right now, I think it's really, really important that you have an idea of truly what price point you can afford. And there still is that number. And so that's the first thing, like figuring that out. And then me or your lender and your agents, like you two, would then come and find out like other solutions to bring down rates. One of which is having the seller pay for you to get a lower interest rate. They can do that by like temporarily buying you down an interest rate for 1 to 3 years, or they could permanently buy it down. Big fan of the temporary buy downs, not a huge fan of the permanent buy downs because of this refinance culture we're going to see and get into.
Okay. And
That's one thing that was super annoying in September. Is I told people, I said, look, this is already priced in. This is hands down the best day I could lock in your rate. I called like a bunch of my previous clients, like, let's refinance you right now. We locked a couple people in the 5s again. And some people are like, oh, I'm going to wait because the Fed said they're going to make an announcement towards the end of the month. And I'm like, do not wait on that now. Trust me. I know this stuff. I watch it every day. And today's the day, but we got to jump on it, and they didn't do it, and now we're back in like the 7s for refinancing. So
everybody's always waiting for the next best thing.
I know.
Yeah, listen to Leah. Listen to your mortgage broker.
I got your
If they're
back.
calling you and telling you there's a good opportunity. They're not just
I
blowing
get
smoke.
so pumped on saving people money, and I'm all for a very short break even. I'm going to refinance it. We're going to lock it in today. You're going to make your money back in 2 months. You won't even notice it happened, and you'll be locked in case something bad happens. So if you have a good lender, you can trust them to do that for you. We get excited about it. We get paid to do that. So yeah.
Okay, let's go off
back.
of refi
Sorry.
though, and let's talk about first-time home buyers, because
Yes.
we've talked a little bit about let's avoid the buy-down programs and kind of look at what can be sustainable over the next 30 years with the hope that you might refinance. What other programs are there out there that Guild is pushing that would be helpful to people to know about? Because when I got into buying my house, my husband and I, and in all of our investments, we didn't know Leah at that point, and we have since moved to commercial since we met. And so all of our investment loans were at 20% down. And Leah was really good at explaining to me, like, that's not always the best use of your money. Sometimes it's better to do a low down payment and utilize that money elsewhere, like in renovations, so that you're increasing your equity in the home, or investing in something else, or putting it into the stock market. So what are some of the ways that you help guide first-time home buyers? What's your favorite product right now? And yeah.
Okay, I'm going to answer this in 2 parts because I want to answer it if you don't have any money and if you do have money.
Okay.
So if you don't have any money, like your local states and counties and even cities come up with these really cool programs that are for you. And if you have a mortgage loan officer that works at a mortgage-only bank, they are going to know about those. You can't go in to like walk into Chase or Bank of America and expect them to have access to all like the national and state programs.
Okay.
And so my favorite one right now, I touched my mic, is the Washington State Covenant program, which is the best program I have ever seen come into fruition in my history. In fact, they are scared that someone's going to sue them and make it go away. It's so good. And so if you, prior to 1968, this is now a history lesson, you were not allowed to buy a home basically unless you were a white male. So
Isn't that cool?
is that exciting?
Isn't that cool?
It's fun.
Look how far we've come. Look at us now.
We can have credit cards.
Look
and
at
I
us
can own my own
now.
home.
And we can wear pants. We can wear whatever we want.
You still chose not to, but you cut them a little.
Yeah.
I said that right. So the government came out, they did like a PhD paper on what ethnicities are still hurt by those covenant laws.
Yeah.
And I'm going to try and list them all out right here, but we can put a link too for it. But if you're Black, Hispanic, Korean, Native, basically anything Native Alaskan, Hawaiian, or Native American, and I think I'm missing one, then you can get 20% down at 0% interest from the state, and they cover all your closing costs. We've done like 5 of these so far. It came out in July. And you come in literally with $0, but it reduces your payment like so much. Like one person if they had come in at like their regular 3% down or whatever, or, you know, if we could found them a 0% down program, it was like $1,200 less a month.
Wow.
To get them in, because the 20% doesn't have a payment, and it's just the government's giving it to you.
Okay, so what Leah's saying is the more money you put down towards your mortgage, which I always put 20% down, means that you can forego certain expenses like the mortgage insurance that's required if you put less down. So the more you put down, the less risky you are to banks, and the mortgage payment is going to be reduced. The less you put down, like 3%, the more risky you are, and you'll end up having to pay for that risk in your mortgage payment.
And the most powerful thing about that is, like, because some of these like community members have been shut out from their certain cities where their family was living, and so it really does bridge that gap. They've tried to find the best way to do that. So like someone that couldn't afford a home in Tacoma now can afford a home in Tacoma instead of buying in Puyallup, because the difference is about $100,000 higher approval amount for the same payment. So it's like really cool to help with affordability. If you have money, and you're looking, because people are like, oh, should I put more money down because interest rates are high? Like, if you, I try and say this because we're on a podcast and I usually have a visual for this, but like if you look back at like how much CDs were giving you back, certificate of deposits, and then what interest rates were tied to, you'd see that like right this year we actually have one of the lowest gaps between the two. So like you could put $100,000 in a CD at shout out to Wealthfront. They have a really good product. I think it's 5.5% you get on your money. If your interest rate's 6.125, you're really only losing 0.625 on that money. So all like the way our system works, it's all checks and balances, right? So it's like, it's the same conversation when rates were really, really low, is like you don't want to put as much money down because you're never going to get a 30-year fixed rate mortgage at 2.5% ever again. Like, try and get the biggest loan you can from the government to help out with that. And the same thing actually happens now. So you have more liquidity, which is less risky. More liquidity meaning you have more access to cash if anything happens. And you're still making money. If you want to be even more aggressive, you could be in the stock market, but like you could get a very safe investment at a very high interest rate. The reason I bring back looking it back, even when interest rates were at 2.5%, CDs were at, I feel like my bank offered me a CD at 0.01%, you know, like who even talked about CDs at our age?
Right.
Like, no one has them, and now people have them.
Now it's coming back.
Yeah. So that same cost differential, it actually makes more sense now if you're using your money to work for you to keep it out of your mortgage.
Okay, so how much do you recommend first-time home buyers put down?
I mean, if first of all, if you don't have any money, it's okay. You should still look at getting pre-approved, see what you can afford. And then if you do have money, I think I like the Goldilocks approach, like 5 or 10%. I think that the average first-time homebuyer puts about 6% down. Okay. And then in the recent years, that's gone up a little bit because the interest rates are higher, and sometimes people need to put more money down to get approved. So always my favorite's been like 5 or 10.
I think that's good to hear, because I think a lot of people get afraid that their barrier to entry for first-time home buyers is like, oh, I don't have 20%.
Yeah.
I don't have $200,000.
I don't have 20%
to put down a $1 million home.
Yeah, or even if I want to buy a $500,000 house, like I don't have 20% of that. Just knowing that should not be your barrier, because that's not even a requirement to have 20% down. Yes, there are fees that come along with not putting 20% down, but I would say average, my clients are probably I would say that's about right, about 6%. Yeah.
Okay, so we've covered a little bit about how much a client should put down, but we haven't talked at all about conventional or FHA programs. Do you have a preference?
I mean, with the lower down payments now, FHA is actually making its comeback. Their mortgage insurance got reduced in 2023, and so their mortgage insurance is cheaper now. We always look conventionally first, and then we price everything else out to see what else makes sense. So if you aren't looking at both options, I think you're making a mistake, because like FHA, you have a lot of times better interest rates, and if the mortgage insurance isn't going to be that much expensive or more expensive, then a lot of times priced out wise, FHA is the better case for first time buyers. You can only have one of those.
Okay.
Sorry, they're going to the online trolls. You can have more than one FHA. You have to meet other guidelines, like you have to be 100 miles plus away, some
Okay.
other things. So it's like, but most of the time you can only have one of those.
Right.
So an FHA does not stand for first-time home buyer. It's a federal housing agency. So anyone can use an FHA loan. It's just slightly less down, and the government is insuring the loan instead of private companies.
Okay. Excellent.
Yeah.
So, what are you predicting will happen in 2025? We have a new president. He's talked a lot about tariffs, and he's talked a lot about mass deportation, and he has also talked about taking over the Federal Reserve. Are these things that the mortgage industry is talking about, and do you anticipate the rates will go up or down?
So the thing about
Just an easy question.
I know.
Just like a one sentence response to that would be, if you could just sum it up
unavoidable
for-
would be my word, because whatever happens, like, and it's like, it does suck to think about, if you were really pro, we live in a very blue state, so if you're very pro Kamala, it's hard to like take away the emotions behind it. So I don't mean to, if you were a supporter of her, but
We're
it's
just
like
talking predictions about the housing
I know,
market.
exactly.
Yeah,
So it's
just
like,
talking
if it was, Trump has been elected before, so we
Yeah.
have seen it. So it's actually not that, it's not that impossible to make these predictions. And he is a real estate investor himself. So
Right.
the policies and ideas that stems under him are like very much like aggressive investing strategies and stuff. So I do think, as long as inflation stays stagnant, we should finally see interest rates come down. I think they'll start to come down in, like, if I'm predicting, like, I want to say March or April. And then once we actually start seeing them come down under this new presidency, they should be going along with their projection. Our economist at Guild, who's awesome, his name is David Batney. You should always look him up. He's like a genius. He predicts it so well every year. And he was like, this year's going to be a roller coaster. We're going to go up and down and up and down and up and down before we get down. And so we've had quite the roller coaster this year.
Yes.
I think we'll start to see the interest rates reducing in like March or April and slowly trend down. That being said, Trump is very pro-housing, so we might come up with like new guidelines and stuff that help investors and people buying, and that would be bad for first-time home buyers, because the easier it is to buy, the richer people are going to be taking advantage of that. So like, it's going to be harder market. Interest rates lower, easier to buy. You've got a lot more people entering, and we're battling again, which we always have.
Competition, right. So I talk to my clients about this all the time. I love looking at houses during December because nobody else is doing it, right? So that's a perfect opportunity to try to get your foot in the door and get maybe a house under market value, step in with equity in your pocket, which is what we've done in the past. But I think a lot of people are looking at this as this being the hard point in time, but you're not competing against anyone else.
You can compete against the interest rates that you have presented in front of you, or with all of the other people that are going to jump back into the market as soon as interest rates come down, because they're doing exactly the same thing that everybody else is doing.
Yeah.
So you can compete with yourself and the interest rate that is presented to you, or tons of other people, which is going to drive the price up. And then did you save any money by not doing it when the interest rates were a little bit higher, or did it just come to a wash?
I rarely get fired from my clients, but I got hardcore fired this year because this guy goes, I want to buy $1 million home. And I was like, I want to put 20% down. I finally saved up $200,000 is what he said. Actually, that's how the conversation started. I said, oh my God, congratulations. That's a huge feat, right? Like, that's really impressive to save that kind of money. And in my head, I'm already like, I know he's going to ask for $1 million home. I'm like, what size home did you like to get pre-approved for? I'd like to buy $1 million home. I'm like, how did I guess? And he goes, because I need to put 20% down. And I'm like, let's just rewind it back a little bit. Like, what would have happened if you put 10% down and you bought in 2022, because that's when you had 20% down. Your house would have been, or 2021, sorry. His house, he would have got like a 2.5% interest rate. His house would be worth way, way more. So it's like, to your point, like, the waiting has a cost, and every single lender out there will put in like a cost to wait calculator. And I really like those because they're kind of like,
That's
it
really
never
good information.
makes sense to hold off if you think you're able to buy. And like I know they say the best time to buy is yesterday. I think the best time to buy is when you're ready to buy. And it doesn't matter what's happening in the market because you can't change what's happening in the market.
Right.
But
Do you think house prices are going to go up here in Washington?
yeah, I mean, we might actually see like condos go back up even too, pretty aggressive.
Okay.
Because the price per square foot on those are still so cheap compared to single family homes.
And right now they're tanking, so
Yeah.
like great time to get out there. guys.
I think so. Buying a good condo with a good HOA
Right.
is like a
Well, that's
hidden gem.
That's how I started my investment journey.
Yeah, me too. I would still live in a condo if I could. My next big move, I want to buy like an apartment building and reno the whole upstairs into a penthouse.
And then you have your
Amazing.
chef downstairs.
No, I just have like it's like I live in a condo, but I
know,
made
but,
an
like,
investment style.
on-site chef.
Dude, you have so much fancier dreams than me. I'm like net
Manifest. Where's the
$0
vision board?
bill. I know.
Are you, as an investor, I have to ask, are you planning to buy in 2025?
I am not, but that is not because of like I think I'm not holding out on the market. I just had a baby. We just did a huge renovation in our home.
Babies are expensive.
They are.
I mean, they're so tiny. You don't need
How do
much
they cost?
space,
I
but they
know.
cost a lot of money.
Yeah, and it's finally something that I just finished like a giant renovation in my home.
Okay, tell us about that a little bit.
It was a triplex, and I turned it into a single family home with an ADU
Where?
in Green Lake.
Yeah, right off the lake.
Yeah.
Amazing.
Yes, it was very fun. It's like my dream neighborhood and
You
house.
should check it out because Sarah's redoing her entire house right now.
Forever and ever and ever. Yeah.
So
Leah's
fun.
vibes are so like dark and moody, and when you go into her house, she only whisper talks to you, but it's like
I can't
very
upset the
sexy.
mood.
Oh my gosh, amazing.
We have a vibe room.
Yeah, it's
No
all
TVs
vibe.
allowed. Yeah.
Black and like wood and
Well, I mentioned it because the second I finished it, I was like, I'm going to buy a house in Bellingham and do it again. And I'm like, maybe I should wait until I see like if I can work and have a baby and do all this with the same 10 out of 10 scoring I try and give myself.
why Bellingham?
I love Bellingham.
Okay,
I just love Bellingham.
it isn't because that's a hot spot.
I do kind of think it is, but I don't want to say that on this podcast so anyone else will buy there. It was one of the
It's
few.
not hot.
No, it's not hot.
Not go to Bellingham.
People from Canada are not moving there. It is not.
Arlington
They're not
isn't
redoing
exploding.
the waterfront. It is not.
Yeah, you won't find cool stuff
No.
there.
Gross. Stay away.
Well, amazing. I'm so glad you were able to come on our show.
Thanks for having
and help
me.
our viewers understand a little bit about the mortgage industry and how they can make their dreams become a reality.
Yeah, and there's no dumb questions. So if anyone's watching this or listening to this and you want me to talk more about anything and more specific to them, I would love to. So
Yes, we love follow up.
I love talking about
Thank
it.
you so much.
You're welcome. Thanks for having me.
Yeah, thank you.
Bye.